The SCHD ETF has got to be one of the most popular dividend growth ETFs of all time. This is not only evident from the massive amount of assets under management the ETF has, but more so the sheer amount of interest online the Schwab ETF has. Now this had me thinking as of recently, what exactly makes this ETF so popular compared to other ETFs that might also offer a slew of high quality attributes? Well, in this video, we're going to break down what I think are the 4 reasons on why this ETF is so popular and so good for these exact reasons. Now make sure to stay tuned, drop a like down below, and subscribe for more future content like this. Now the first reason on why I think SCHD is so popular is because of the ETF's holdings breakdown, but not specifically which stocks necessarily are within the ETF, more so the methodology on how the stocks enter or exit the ETF to begin with. Now because the SCHD ETF's objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Looking right here at the Dow Jones US Dividend 100 Index methodology, this right here basically explains exactly how stocks are either added or taken out of the Dow Jones US Dividend 100 Index or the index that SCHD tracks. Now this is a pretty sophisticated process, and because of the screening process, it makes it really tough for stocks to even be qualified to enter the index to begin with. To enter this index, stocks must pass the following screens. Things like minimum of 10 consecutive years of dividend payments, minimum FMC of US 500 million, minimum 3-month ADVT of US 2 million. Now there's all sorts of other different screenings that stocks need to have or need to pass in order to be qualified to be entered into the index. And if you want me to break this all down in a more in-depth video, definitely comment down below and let me know, and I will do so. But that being said, for SCHD investors, including myself, I'm a big fan of the overall strategy on the screening process of how stocks enter or exit the fund's index that it tracks, which in my opinion is one of the most important aspects and one of the big reasons the ETF has performed so well historically. Now the next thing that I think is very important on why this ETF is so popular is none other than the SCHD dividend growth rate. Now dividend growth rate is an annualized percentage rate of growth that a particular stock's dividend undergoes compared to a 1-year period before that. In simple terms, dividend growth rate is basically at how fast the underlying ETF or stock is going to pay an investor over time just for holding on to the asset. Now for SCHD, for example, the trailing 12-month dividend growth rate is 7.13%, the 3-year is 12.33%, 5 years 13.92%, and 10-year 11.32%. Now this is a very important metric, especially for dividend growth investors that are looking to hold on to their investments indefinitely, not sell off their investments during retirement, not the 4% rule, none of that, for investors like myself that are looking to build a massive war chest of dividend-paying stocks and ETFs, or specifically for this video, a massive amount of SCHD, and use the dividends later on in life to live off of. And of course, hopefully even have extra money to live out the later half of your life exactly how you want to. Now for the investors out there that do have that as their goal, that want to be able to hold on to an ETF indefinitely and use the dividends over time to cover all their bills and more, dividend growth rate is very, very important. Now for those that might be a little bit confused on why dividend growth is so important, here's one simple reason on why it's very, very important. The US inflation rate, which is around 3.18%, but historically somewhere around 2% per year. So if we look at the inflation rate just over the last few years, of course, we can probably assume that best case scenario inflation will probably continue at around 2 or 3% per year, but maybe even higher as time goes on. So for an investor that's buying into stocks and or ETFs that don't have healthy dividend growth, the inflation rate is going to completely decay all their future potential dividends if things continue to get more and more expensive. But going over the SCHD ETF's dividend growth rate over time, the 10-year time frame 11.32%. Even when things got very, very bad and inflation rose like crazy back in 2022, the dividend growth rate of SCHD in theory would still outpace inflation. But it's not just inflation that makes the dividend growth rate of an investment so important, and specifically in the case for SCHD on why I think the dividend growth rate is crucial when buying the ETF. If we look at a dividend calculator and start with just $25,000 and add $12,000 per year, have DRIP turned on, and have an initial starting dividend yield of 3.5% and an expected annual dividend amount increase of 8%. Now, even though SCHD could have a higher or lower expected annual dividend amount increase, just going with 8% just to be safe. Now, if we were to invest this relatively small amount of money for 30 years, look at what happens over time. Now, before we go ahead and calculate all this and see what numbers we would get from now until 30 years, we have to understand exactly what's going on here. The power of compound interest is what's happening. Now, compound interest is the interest on savings calculated on both the initial principal and the accumulated interest, or in this case, dividends from a previous period. As the investor continues to buy more and more shares of SCHD, along with reinvesting all the dividends that were being paid from the previous year, the power of compounding is really going to take place, and the dividend snowball is going to get bigger and bigger. The SCHD investment would start at $25,000 and offer around $886 per year in dividends. Now remember, this investor is going to be consistently contributing to the portfolio and is also going to be reinvesting their dividends. So the compounding effect is really going to take place. So much so by year number 10, this investment that started with just $25,000, an additional $1,000 per month, and dividends reinvested is already up almost to $190,000 and over $10,000 per year in dividends. Now by year number 20, a little bit further down, $623,000 in principal and already $55,000 plus per year in dividends. And by year number 30, especially for the younger investors out there that definitely have some time on their side, by 30 years in, $2.25 million with over $328,000 per year in dividends. Now, it's pretty hard to find a high quality stock or ETF with long-term dividend growth rate comparable to that of SCHD. And like I kind of touched on a second ago, dividend growth rate is so important, and I think one of the main reasons on why investors love SCHD, because take this for example, investors were getting paid around 25 cents or so on a quarterly basis around 10 years ago, and just around 10 years later, investors are getting paid almost 3 times as much on a quarterly basis from just dividends alone, for just holding on to the underlying asset. Now this means that in theory, if the dividend growth rate was to continue, investors are going to continue to get paid more and more and more just for holding on to SCHD ETF. Now the next thing that I think makes SCHD so popular, and definitely one of the main things that's gotten my attention when it comes to SCHD, is how the ETF has performed as far as price return since the fund's inception date. The fund is up around 180+%, and this is not even including dividends. And considering the ETF has only been around for say 12 or so years, that's a massive amount of return considering, like we said a second ago, the dividend growth rate is so high, and not to mention the starting dividend yield is also considerably high. Now to be more specific, to chart out SCHD's returns on a total return basis, now this is price return and dividends included. So looking at the total return that SCHD has had on the 1-year time frame, 7.19%. On the 3-year time frame, 43.20%. On the last 5-year time frame, 62.89%. Now, of course, there are stocks or ETFs across the market that do offer bigger and lesser returns. That's of course true. But as far as a consistent, well-generating vehicle that has consistently, at least historically for the most part, went up and to the right as far as ETF price, also has been paying more and more in dividends on a yearly basis. SCHD for the most part has a lot of other ETFs beat, in my humble opinion. Now, the last reason on why I think the SCHD ETF is so darn popular, and for good reason, is none other than the expense ratio. With SCHD having a 0.06% expense ratio, the ETF's expense ratio is barely costing investors anything long term. Now, in my opinion, expense ratio is not necessarily something to really worry about when it comes to the first few years of investing, but as you build a bigger and bigger portfolio, and as you, of course, buy more and more shares of SCHD, an expense ratio is definitely going to be something that you're more and more concerned about. But like I said a second ago, with an expense ratio of just 0.06%, most investors feel like it's very fair and definitely worth the price that SCHD offers. So there's a few reasons on why I think the SCHD, the Schwab US Dividend Equity ETF, is so darn popular across the market for investors young and old alike. Take it from someone like me personally, who is a long-term dividend growth investor. I've scoured different ETFs trying to find something that fits my strategies, my risk profile, and pretty much everything that I want in an ETF, and it's been very, very hard to find. Now, although there are different high-quality dividend growth ETFs out there, something like DGRO for example, one thing's for certain, there's absolutely nothing exactly like SCHD. But when it comes to SCHD, the Schwab US Dividend Equity ETF, if you had to pick one of the main reasons on why you think this ETF is so popular and has only grown in popularity over time, which reason would it be and why? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.